Understanding withholding taxes and their role in cross-border transactions. Overview of withholding taxes in cross-border taxation. Withholding taxes are an established mechanism used by many tax systems worldwide to facilitate the collection of income tax on cross-border transactions. This approach ensures that taxes are deducted at the point of origin known as the source when specified payments are made, particularly in situations involving overseas or foreign persons. By mandating the deduction of taxes at the source, jurisdictions aim to ensure timely and effective tax collection from non-resident entities that may derive income from within their borders. Mechanism of withholding tax deduction and remittance. Under typical withholding tax regimes, the responsibility for deducting taxes from payments lies with the payer, who acts as the intermediary between the recipient and the tax authority. When certain types of payments are made to a recipient, often an overseas party, the payer is required to withhold the prescribed tax amount and remit it directly to the tax administration. This system of withholding and remittance is designed to ensure that non-residents, who may not have a strong connection to the local jurisdiction or are not registered taxpayers, still comply with local tax obligations. Scope and application of withholding taxes. Withholding taxes generally target specific types of transactions involving foreign parties or activities that do not typically necessitate formal tax registration. For instance, withholding taxes may apply to 1. Dividends. In many countries, when a company distributes profits in the form of dividends to shareholders who are non-residents, a portion of these payments may be subject to withholding tax. 2. Interest payments. Payments of interest on loans or other debt instruments to foreign lenders often fall within the scope of withholding tax regimes. 3. Royalties and licensing fees. Payments made to non-residents for the use of intellectual property or other rights are frequently subject to withholding tax obligations. In some instances, withholding taxes may also be levied on domestic transactions, although their primary focus often remains on cross-border payments and the taxation of income earned by foreign persons within a specific jurisdiction. Introduction of withholding tax in the UAE's corporate tax framework. With the introduction of corporate tax in the UAE, a withholding tax mechanism has also been established to cover certain categories of income paid to non-resident persons. This measure reflects the UAE's commitment to aligning its tax system with international norms and ensuring that non-resident persons deriving income from the UAE are subject to appropriate tax obligations. However, it is crucial to note that, as of the initial implementation of this regime, the withholding tax rate has been set at 0%. This means that although a withholding tax framework exists in the UAE, no tax needs to be withheld on payments made to non-residents at present. Implications of a 0% withholding tax rate and potential changes. The current rate of 0% implies that resident persons making payments to non-residents are not required to withhold any tax at source or remit tax to the UAE tax authority. This provision supports a favorable business environment by minimizing administrative burdens on businesses and promoting ease of cross-border transactions. However, it remains important for businesses and taxable persons to monitor potential changes to the rate in the future. If the withholding tax rate is increased, non-resident persons who become subject to corporate tax in the UAE may have the opportunity to reduce their corporate tax liability using a withholding tax credit. This credit allows non-resident persons to offset their corporate tax payable by the amount of withholding tax that has already been deducted during the same tax period. In cases where the withholding tax credit exceeds the corporate tax liability, any excess amount will be refunded to the taxpayer. This ensures equitable treatment and prevents the overtaxation of non-residents earning income from UAE sources. For more details, contact us.